morning, everyone. My name is Darby, and I'm the Workers' Comp Underwriter at CID. In today's webinar, we're going to learn how to understand the final audit process for workers' comp. All participants will be defaulted to mute and able to hear but not speak. So if you have any questions throughout the webinar, please post them in the chat room and I'll answer them as they come in. And then, of course, a short survey will appear at the end of the webinar. And as always, we appreciate your feedback. The objectives for today's webinar is to understand how an audit can impact your insured's premium. We're going to learn about what documents and information your insured will be required to prepare in order to comply, and a more detailed understanding of what to expect during the process. So what is the purpose of a workers' comp audit? Everyone knows it's hard to write new business and keep renewals, and one of the easiest ways to lose your workers' comp is noncompliance of a final audit. So I want to provide you with a better explanation of the audit process and what the carrier is looking for to better you in managing the policy effectively and helping the insured comply. As many of us know, it can be like pulling teeth to get the insured to comply with the audit request. So the workers' comp audit serves as an annual verified review of payroll and tax records at the request of the insured's carrier. The audit process allows the carrier to determine the final cost of any work comp policy once the policy period ends. So this checkup ensures that the payroll for the policy period was accurate and that the carrier has the most up-to-date information on the company and its employees. So before the end of the policy term, the insured is going to receive a notice directly from the carrier regarding their upcoming final audit. The insured will receive an audit questionnaire listing the items needed in order to complete their final audit, along with a blank audit form for the insured to fill out. As the broker, you can also request a copy from the carrier or reach out to your wholesale broker in order to provide you with it. This request will detail all information needed to be provided to verify payroll and class codes. We'll discuss what some of those items are a little bit later in the webinar, but it's really important to be in contact with the insured during this time to obtain all the necessary documents from them. The insured typically has around 30 days to comply with their final audit, and a lot of the times a broker will come to me a week out from the due date requesting additional time for the insured because the insured hasn't started it yet. And unfortunately, carriers are extremely strict with the due date, so additional time is not granted. That's why it's really important not to let this slip to the wayside. Usually the carrier will request the insured to complete a voluntary workers' comp audit. So the insured will submit their completed audit questionnaire and all of the supporting documentation by either mail or online. For larger accounts, carriers will sometimes assign the insured an in-person or phone audit, which requires additional information to be provided. We're going to discuss the difference between voluntary and physical in depth later in the webinar, but once you've completed the physical or voluntary workers' comp audit, the carrier will process this, taking anywhere from around 30 to 90 days from the submission date. So once the carrier has processed the audit, it will be issued to the insured and also the broker. If actual payroll submitted on the audit is lower than what was originally quoted by the carrier, the insured is going to receive a refund. But if actual payroll is higher than what was quoted, the insured is going to end up owing additional premium to the carrier. So if a large amount of premium is owed at the end of the audit, carriers will likely approve a payment plan for the insured. So a few points to mention that's important for the insured to be aware of is the final audit is mandatory to complete as part of your insurance coverage and will occur after each policy period in order to verify payroll, class codes, locations, subcontractor exposure. Um, the audit request will be sent out from the carrier to the insured approximately 30 to 60 days before the policy period expires. So it's good broker practice to set a reminder to check in with the insured around that time to see if they received it. I've had a lot of um, insureds in the past just completely ignore the audit request because they're not sure what it is, or they just push it to the side and they come back to it. But at that point, it's already non-compliant. So checking in with them around that time can help them, get in front of it rather than having to catch up later on. If in some circumstances, the carrier is going to request additional documentation once they've received the initial documents, so a phone interview or both, depending on the information provided, can occur. So, and the carrier is really good about notifying you of any changes or any additional information they need. So it's just all about communication between the insured and the carrier at this point. What information is required? So the most important step in preparing for your premium audit is to have the appropriate records organized and available. This is going to include payroll summaries or a similar report for the dates of your policy, employer's quarterly federal tax return form, 941s or 943 reports, quarterly unemployment insurance tax reports, 1099, W-2s, W-3s, overtime wages summarized by classification, list of employees and duties, subcontractor and contractor records. All of this is going to be listed out in the audit form the carrier sends to the insured, so the insured will know exactly what the carrier is looking for. So just having this in order before the audit occurs saves the insured a lot of time. I do see a question in the chat. Does the insured automatically get a copy of the audit, or do they have to request one? So for the final audit with the results, the insured will always receive one directly from the carrier. The carrier will send it direct to the insured, and they will also send a copy directly to the broker. So you'll both have one. For the audit questionnaire, which the insured needs to complete in order to comply with the final audit, the insured will also receive that directly from the carrier. So as a broker, you can request that on behalf of the insured. That way you're assisting them in the process, but they do receive one direct from the carrier. Now, I want to go over different types of audits. So when completing the final audit, your insured can be assigned one of the two types by the carrier, physical or voluntary. Physical audits are typically assigned to those with a higher exposure, such as contracting risk, manufacturing, or businesses that have a high payroll exposure. Physical audits are performed within 60 days after the policy period expires. So a physical audit is usually performed at the insured's place of business, but it could take place at another location, such as the accountant's office. If you have any general questions about the appointment, you should contact the insurance carrier beforehand. So the way the process goes is the insured will receive a notice from the carrier that the policy period has been assigned a physical audit, and then the carrier will contract out a third-party vendor that will end up contacting the insured directly to set up a time and date. This is where I start to see problems begin due to communication. Either the insured isn't aware of who the audit vendor is, so they aren't answering the phone, or the contact information on file with the carrier isn't correct, so the vendor isn't able to contact the insured. When binding a policy, contact information is required by the carrier, so it's important the information on file is the person who is aware of the audit or submitting the documentation. So if contact information needs to be updated for the business, when the initial audit request or notice is initially sent out to the insured, that's the time to do so. The audit vendor will send a list of documentation the insured will need to provide to them. This will include payroll summaries, employee records, cash disbursements, certificates of insurance, everything we went over. If the insured has not set up a time and date for the audit to be conducted or documentation is not submitted to the carrier, the audit will be marked as delinquent or non-compliant by the carrier. You obviously want to avoid that with any audit, but physical audits are especially difficult once they're marked as non-compliant because then the audit vendor will need to be reassigned to the insured. Another attempt to contact the insured will be sent out. And just because there's more parties involved with a physical audit, completing it initially saves the insured a lot of time. Voluntary audits is the second type. It's what you typically see with most insureds. They're assigned to risks with lower exposure and smaller payroll. Businesses such as retail stores, small HOAs, or restaurants. Those are just a few of many examples. As I mentioned previously, an audit notice will be sent out to the insured before the policy term expires, and this notice will provide the documentation required to be submitted and the directions on completing the audit. Then the carrier will mail a copy of the blank audit form to the insured for them to complete, and then the insured can return that back to the carrier via mail or fax or email. The broker can also submit the form on behalf of the insured to the carrier. I actually prefer our insureds send the documentation to our office so that way I can submit it to the carrier myself. That way I'm hands-on, I know it's been sent out, and I can assist throughout the entire process if the carrier comes back and needs additional information. And then once the carrier receives that, a final audit will be released around 30 to 90 days after that. So the biggest problem I come across with audits is subcontractor exposure. Businesses such as property managers, homeowners associations, or contractors may utilize subcontractors from time to time, but they fail to check that the subcontractor has their own work comp coverage. It's common misconception to assume the subcontractor has their own workers' comp. So for best hiring practice, make sure to confirm this before hiring the sub. Otherwise, the subcontractor payroll will be included in the insured's final audit payroll. This can generate thousands of dollars owed by the insured. I recently had a homeowners association that was audited, and the payroll was like 100,000 over what they were initially rated for. That always indicates to me, especially when it's a homeowners association, that subcontractors have been included in the final audit. So in order to avoid this, at the time of the audit, when the insured submits all of the payroll records and other audit documentation, the insured also must submit a certificate of insurance for each subcontractor they've used during the policy period. I have an example on the right of the slide. This is kind of what it looks like. It would have the agency name, the insured's name, and that last box, the workers' comp, that's where you would fill in the subcontractor's policy information with the number and the effective dates. The certificate of insurance, in order for it to be accepted by the carrier, must show that they have their own work comp coverage with the carrier and that their coverage falls in line with the insured's policy period. So let's say we have an insured with a policy period of May 23rd, 2023 to 2024. The subcontractor needs to have a policy period that falls in line with that. Otherwise, it would still remain included in coverage. A lot of the times, I receive certificates of insurance from the insureds, and it has one of the requirements or neither, and unfortunately, the carrier cannot accept that. So that's really important in order to, save the insured tons of premium savings. When you write a new policy or are working with the insured on a renewal term, discussing changes that can affect an audit is very important. This could be throughout the year, these check-ins, but at least at renewal. And if you're writing new business, the bulleted items on the slide are important areas to pay attention to because a lot of things can change in the year. And so here's some of the questions you want to ask. Have they expanded? And in that question, you'll find out if they've added another location. Locations are super important because wherever that insured goes to work, it needs to be reflected on the policy in case of an injury. In order for coverage to be afforded, all locations must be listed. And in any expansion, the insured may have hired new employees. So in doing so, that is going to change the payroll. And a lot of times people get caught on that when the audit is being completed by the carrier. The payroll may be increased by a couple thousand throughout the year, but the carrier wasn't notified of that. When the audit is completed by the carrier, they're going to end up owing that premium then. So if we aren't checking in for any changes and notifying the carrier during the policy term, rather than once the policy expires and is being audited, the insured's going to owe more money. Are employees performing new duties? If so, that could change the class codes that they're reported under, and the rate could vary. So that could be an increase or decrease in premium if you're moving an employee into another position. Lastly, subcontractor exposure, which I discussed previously. The carrier is going to be looking for certificates of insurance for every subcontractor at the time of the audit. Otherwise, that payroll will be included. And then, so all of these things need to be paid attention to in order for you to not have any pickups with the insured. And these are things that can upset the insured more than anything else when they have problems at the time of the audit. So checking in is really good practice as a broker. I do see a question in the chat. Does a waiver of subcontractor liberates our customer of the sub payroll? So I believe you're referencing the waiver of subrogation, which unfortunately that doesn't cover the payroll. That only covers if a claim tour occurs. So a certificate of insurance would still be required for that subcontractor. There's one more change I want to discuss. I'm giving it its own slide, and that's entity structure changes. I process these weekly, and I come across a lot of issues, most of the time that being the entity or ownership change occurred months ago, sometimes even years ago, and it's our office is just being notified for the first time. So did the company change their structure? And what I mean by that is, did it go from an individual to an LLC to a corporation? These are completely different structures of a business, and those are filings you need to make with the state when the change occurs. I want to say 90% of the entity structures I process are not filed and changed correctly by the insured, so checking in with them, you can hopefully avoid this. Changes to ownership structure. I want to give an example of when I just processed. The business was initially going from a sole proprietor to an LLC with multiple owners. So they're going from having one officer at 100% ownership to multiple officers with split ownership. The insured would need to file that change with the state. They would also need to notify their broker's office, so you as the broker can then report the change to the carrier and the WCIRB. Did the company change ownership? Was it sold? I do run into that more than I would like, but there's times the insured didn't notify the broker that someone bought them out or they merged with another company. The change in ownership will affect the final audit and the current policy as well. All of these changes impact the audit significantly due to exclusion forms. Anytime there are changes like this, new exclusion forms are required for the new owners. And each of those entity types have their own set of rules and forms required. Not all ownership can be excluded. That's pretty rare. There's small rules for different percentages of ownership that wouldn't allow them to be excluded, but you can contact your underwriter in those special cases. For the example of the sole proprietor changing to an LLC, This is a perfect example of how exclusion forms affect the final audit so much. So a sole proprietor is the only entity that is the officer is automatically excluded in coverage. However, they're changing to an LLC with a few new owners. We would need updated exclusion forms for all new owners and that initial sole proprietor because they're no longer automatically excluded from coverage. Therefore, if we did not receive any of those forms at the time of the audit, all of the officer's payroll would be included. So, how noncompliance affects the audit. If the insured fails to complete their final audit, it will be marked as noncompliant by the carrier. In result, one or more of the following items can occur. Due to the lack of information the carrier has to complete the audit, typically I see the carrier will charge up to 2 times the original estimated premium when a policy is non-compliant with the audit request. Other carriers will estimate the final audit with all the payroll in the highest class code. That's obviously going to result in a lot of additional premium due. And then some carriers will release the final audit with a costly audit non-compliance charge. I see charges anywhere from $5,000 to $35,000 on top of the original quoted premium. So the non-compliance charge is intended to compel policyholders to comply with the final audit. In addition, failure to cooperate with the audit may result in a cancellation of their renewed policy terms. So if that policy term cancels, they wouldn't be able to find coverage with another carrier until that outstanding audit is complete. The last outcome is the final audit could be automatically endorsed that payroll onto the current term to match what was reported, completed, or estimated, and that of course will increase the premium as well. So I want to stress the importance of complying with your final audit. As now you're aware, by not doing so, it's basically just charging the insured more money and the broker extra time. To resolve a non-compliant audit, the insured will need to submit a request to the carrier to reopen the final audit. At that point, the carrier will give the insured a specified amount of time to complete it. The insured will need to comply with the initial request for all of the documentation. And then for any additional questions the carrier may have, they may request to do a phone interview if necessary. So ensure that the insured is aware that the carrier would be making contact to them. For physical audits, we talked about this a little, but the vendor will be reassigned to the policy and contact will be made directly to the insured to set up a new appointment. And then once the insured has complied with the audit, the non-compliance charge or the estimated audit, if placed on the account, it will be removed and then a revised audit will be released. When to dispute an audit. How can you tell if you need to file a workers' compensation audit dispute? A few things to look for is the audit payroll does not match what you reported. The payroll is distributed differently by class code. The owner's payroll is included in the final audit. If you notice any of these mistakes, you should immediately request an audit worksheet from the carrier. And this will give an in-depth analysis on where the auditor found the payroll figures, subcontractor costs, and owner information based on the documentation that was provided. Once the discrepancy has been identified, the insured will need to submit a formal audit dispute to the carrier along with supporting documentation to back up the revision. And then the formal audit dispute would need to be on the insured's letterhead and signed by the insured. I want to stress the importance of making sure the insured keeps a record of everything sent to the carrier in the case they need to dispute their final audits. I want to briefly talk about the homeowners association that had subcontractor payroll included. That's always my first indication that a certificate of insurance wasn't submitted. However, I always request the audit worksheet from the carrier whenever I'm working a dispute, because that will give me a breakdown of everything. So if a subcontractor is included in the audit, requesting the audit worksheet will show a breakdown of how much payroll that specific subcontractor is. So the audit worksheet just gives the insured a better idea of what they are looking for to dispute. So always request that if your insured has any questions about the final audit results. And then some best practice approach for final audits. Obviously, audits can be really frustrating for the insured, but encouraging them to comply with the request sooner than later will help ease the process. Help your insured understand the penalties involved with noncompliance, whether that be a cancellation, a noncompliance charge, or an estimated audit. And it's important to keep records of everything the insured submitted for the audit in case of a dispute. And lastly, be sure to check in with your insured on any exposure changes during the policy term, location, payroll, employee count, subcontractor exposure, and entity changes, because all of those can affect your insured's final audit outcome. I want to thank you all for joining us. If you have any further questions, you can always reach out to me directly. Jacob will be sending a copy of the webinar out, and I can assist you with all of your needs. So if you have any questions specifically on audits, new business submissions, renewal work, feel free to reach out to me. Thank you.